Hey guys, welcome back to the channel. My name is Ryan Mayo. I make videos about politics. I make videos about stocks and investments. I make videos about economics. I appreciate you joining me today. If you like what you see, please hit that like button. And if you'd like to see more, please subscribe to the channel. Today's video is going to be about the Electoral College certifying for Joe Biden. What does that mean for investments? Is the stock market going to crash because he's going to raise taxes? What does it all mean for us as investors? I'm going to get into that. I also have a stock pick for the week for you guys and a new segment I like to call Investment Translator, where we take concepts of the market and simplify them in terms that we can make action on. So let's get started. First, today it happened. All the states got together. They certified the 306 electoral votes for Joe Biden. He is going to be the president of the United States. The current president, Donald Trump, is out of options really to do anything about it. It is happening. What's that mean for investments? What's that mean for us? Is the stock market going to crash? It could, but it won't have anything to do with Joe Biden. First and foremost, I've done a lot of research about this through the years. The stock market does not care who the president is. Now, that doesn't mean that investors won't tweak their portfolios, tweak their activities, depending on who's the president and what their policies are. But if you look historically, the stock market was gangbusters under Barack Obama after the Great Recession. The stock market was gangbusters at points when Donald Trump took office. It's been up and down. That has a lot to do with the coronavirus and not really to do good or bad with Donald Trump. The stock market was gangbusters under Bill Clinton, despite him completing one of the largest tax increases of all time. My point is the stock market just doesn't care. The things that make the stock market go up and down, the events that are happening externally, are beyond the president of the United States. I know that sounds crazy. We make these folks up to be the most all-powerful people on the planet. They are not. The market does not care. And what we can do is and what I challenge you guys to do and all of us to do as investors is investigate Biden's policies, investigate the likelihood of many of these policies passing or not. Some of the stuff he has is very ambitious and probably not going to become law. Some of the stuff can be. I do expect some sort of tax increase at some point, but do I think that's going to hurt the market? No. I think things that will affect the market are things like his energy policy. He's going to be a lot more aggressive, as Obama was, with alternative energy, and that's going to give you a lot of decisions and a lot of opportunities that you can take within that sector, right? Because alternative energy is growing in a way that fossil fuels and some of the old school energy simply isn't. More jobs and wind and solar and all these things are blowing up, and all these companies and tech are blowing up, and these are things that will be slightly more favored by a Biden administration than they were under a Trump administration. It is my belief, and I think every good investor's belief, that it doesn't matter who the president is. Show me the rules, show me your policies, and I'll pick winners and losers based off that information. And that's the approach I think you guys should take. It's not going to be the end of the world. Whether the stocks crash or the stock market surges is going to be a lot to do with Congress coming together, passing stimulus, with solving the the nuclear bomb that's ticking away, with foreclosures and forbearances that's going on in this country. If Congress can come together, if Biden can get both sides together to fix those problems, the stock market is going to be insane in 2021. But if he can't, if both sides can't work together, you could see a crash. And you guys and I as well, we gotta be aware of this. We have to keep it in mind because it is a possibility. We just gotta keep our eyes open, man. You gotta pay attention to the market as much as you can. You gotta read and investigate as much as you can and digest as much information as you can. It's not all gonna be accurate, but it all paints a picture of what's happening in the overall economy. And you gotta pay attention to both Wall Street but also Main Street, because that dictates things in Wall Street as well. So I don't think it's doom and gloom at all. I think you need to look at Biden's policies and figure out what companies or what sectors of the economy may thrive under those type of policies and make your moves like that. That's what I'm going to do. So the next thing I wanted to do is to touch base on a stock I am excited about, but this is a long-term play. This is not something I think will swing. It may, and it has for some, but this is a long-term play for me, and it's called the Tattooed Chef right? It is the Tattooed Chef. It is currently trading at $20.98. The ticker symbol is TTCF. So take a look at that. This is a stock that does private labeling. So if you think of Costco and the Kirkland brand, or if you go to 7-Eleven and you look at the bottled water and you see the 7-Eleven brand of bottled water or the 7-Eleven brand of ice cream, those companies aren't making that food. They're not bottling that water. They use companies like the Tattooed Chef to facilitate for that for them. So I believe this stock could triple. I think it's a 3x opportunity in the next year, year and a half, 2 years at the most. And this is something that I think you should buy and hold. It's going to go up, it's going to go down, but the fundamentals of this company are strong. The Tattoo Chef is looking to transfer from this private labeling business that they've been doing, and they want to sell directly to consumers. Right? They want to compete with companies like Beyond Meat. They want to compete with the Impossible Company, with the Impossible Burger. They want to make alternative foods because they see that as a sector that's exploding, and they're right. And the cool thing about them is that the Tattooed Chef has twice the market cap and 16 times the revenue of the Impossible Company. So while it's a small entity, considering the marketplace that they play in, they are pulling in some revenue and they've got some opportunities to grow. Now, one of the downsides is I looked at their, selections for some of their personal Tattooed Chef brand, and it's not that many products, but they have at least 100 products on tap, and there's a lot of research and development that's going to go on in the next 6 to 12 months that is going to put more of their product on the shelves. And I believe the people who run the company are very intelligent, and they're going to put the right product on the right shelf in the right city. And I think that is going to be where their success is going to come. And of course, like I said, this space is growing like crazy. They're looking to, the Tattooed Chef is looking to take their private labeling model and continue to do private labeling, but they want 70 to 80% of their business to come from their own brand. And that's where I think, as an investor, that there's a lot of room to grow here. It's a good, strong company, and we'd be getting in pretty early. So I encourage you guys to give that a look and see if that makes sense for your portfolio. So next, I wanted to talk about our new segment called Investment Translator. And today we're going to get a 2-for-1. We're going to talk about support and we're going to talk about resistance. Support and resistance are technical terms that analysts use to identify price points with a stock. So when you're reading a stock chart, as I'm sure you've all seen, and you're looking at the candlesticks, support and resistance represent a ceiling and a floor for a stock. Now, it doesn't mean that stocks can't break out of those ceilings or dip below the floor. They absolutely can, but it just gives you an idea of where investors see a ceiling and where you can expect a stock to hit a ceiling or a stock to hit the floor. If you're looking for good buying opportunities, you want to look for where the support is, right? A stock, as I said, a stock can break through support, but traditionally, if a stock support is at $14 a share, if I see a stock at $16 a share start to dip down to 14, I think that's probably a good buying point, because historically, once it hits that, other investors come in because they like that price point, and that stock will bounce back up. Same thing with the resistance. It creates a ceiling over the stock, and when it gets to that point, it hits that ceiling and tends to come back down. And if you spend a lot of time, and we spend a lot of time as investors studying support and resistance, we can look at outside factors and determine if a stock is poised to dip below the support or to shoot above the resistance. And I want to show you guys a graph that gives an example. This is LCA, right? This is the online gaming company that I've been talking about in the last couple videos, and you can see the orange lines represent the support and resistance, and support and resistance changes over time. So for example, with LCA, this is a company that is pending a merger with the Golden Nugget, and that hype and that information has caused it to rise above its previous resistance. So currently the resistance is sitting around $24.90 and the support is sitting around $18.92. So if this stock was to appear at $17 per se, that's a really good buying point. Whereas someone like me, I bought into the stock around $12, but the support and the resistance has completely changed during my ownership of the stock. And this is something that I like to pay attention to. I like to follow on a daily or weekly basis just to help navigate my next move with the stock. And this can get a lot more sophisticated. This can be used to use algorithms and models that can help tell you when to buy and sell a stock. I've used some of those before. It's a lot of inside baseball and you got to do a lot of studying, but these are tools that as we have more videos, I'm going to keep arming you with more and more tools. We're going to keep learning together. We're going to keep putting this more ammunition into our holster, and by the time we're done, we're going to be killing it, right? Because like I always say, when they are running, we are gunning. So we're looking to buy stocks at a price point that makes us comfortable and that can make us money. We're studying the market cap, we're studying stocks, and we're studying the history and the spending of the company so we have a sense of where it's going to go and where it can hit our targets, right? So let me know what you guys think. Let me know what you thought of some of the picks we made in our other videos. Did you have any success? Did you make any money? American Airlines did pretty well. LCA's done pretty decently, especially if you bought it at a good price. There's other stocks we spoke about as well. Let me know in the comments. It's really been a pleasure. Until next time, guys, I appreciate it. My name's Ryan Mayo. Please like and subscribe to the channel. I am out.